Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture and journey towards financial freedom, financial products, financial well-being, so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. Now this latest video is about my stocks and shares I did review during the month of September 2023. Now it's not to say look at me or boast or brag, it's to prove if I can build what we call a sizable portfolio, by taking some appropriate steps, you can too. So it's more about giving people ideas of how to build a portfolio. For those of you new, the aim is an annual return of 10% each year. For this year, we're looking for annual dividends of £2,400 and we're looking for a year-end portfolio value of £94,000. So how have we done the month? Well, we started the month at £80,021. We ended the month at £81,998, so an increase in the month of £1,967. Now, year to date, our return is up 5.96%, so nowhere near 10%, but a quick comparison, the FTSE 100, top 100 UK shares, is actually down 1.1% year to date, so we're beating the market, shall we say, considerably. Now, during the month, look at the following chart. Monthly contributions of £810.14. Tax year contribution to date from April to the end of September was £4,636.40. And our platform provider charges monthly fees of £12.62, which on average is based upon the percentage of our portfolio valuation. But so where are we based, shall we say? Well, predominantly based in the UK and Europe, 64.98%, USA and Americas 21.86%, and Asia and emerging markets 13.15%. Let's dive and see what sort of dividends we received during the month. Well, it was our third best performing month of the year, shall we say. Total dividend in the month, £503.18. So year to date, £1,971.47. We're above where we saw expectations, but we'll have good months and bad months. And across our shares, the average yield is 5.19%. So what sort of dividends did we receive? Well, Lloyds, the banking group, gave us £155.73, reinvested into 359 new shares. Barclays gave us £42.87, we didn't reinvest. NatWest gave us £51.48, which gave us 21 new shares. HSBC is now back on quarterly dividends, gave us £32.70 for new shares. And finally, Legal & General gave us £220.40, 97 new shares. So a collection, shall we say, but predominantly based upon the banking sectors. But let's just say £500 a month, it's very nice to our portfolio. Actually see what sort of holdings we've got within our portfolio. So we'll do our shares first. At the moment we've got 9 shares, 5 in profit, 4 in loss. Total share values of £38,690 makes up 47.2% of our portfolio, of which 41% is in the FTSE 100 and 6% is in the FTSE 250. So let's go through some of the shares of note. Our largest holding is Legal & General. The insurance company does what it says on the tin, safe secured, but it's got a very nice yield of around about 8%. 3,957 shares, £8,800 makes up nearly 11% of our portfolio. Next holding is Lloyds, the banking group, 19,189 shares, £8,500, 10% of portfolio, and again, should give us a very good dividend during September. Our next holding is Aviva. We own 1,733 shares, £6,700, 8% of our portfolio, but it is giving a yield of 8%, and it will pay a very nice dividend, shall we say, at the start of October. But we did top that up. We bought another 208 shares for £800 because it's giving a yield of 8%. Our next holding is Card Factory, the retailer, 3,207 shares, £3,200. 4% of our portfolio. It has been on a good run this year and it did have a very good trading statement. Profits have increased, debts are down, but it does at the moment have some kind of restrictions on paying dividends because it took out some kind of bounce back loans. But dividends will be recommenced in 2024, 2025, but a very good set of results as their interims. Our next holding is HSBC, 414 shares, £2,669, 3%. Very good share, shall we say. It was done for diversification away from UK banks. It will pay a very nice dividend on the quarterly, which is reinstated, but it is given a special dividend at the start of next year. We own Barclays Bank, 1,588 shares, £2,500, 3% of our portfolio, and we own NatWest, 957 shares, £2,300, nearly 3% of our portfolio. And then away from the banking sector, we own Sainsbury's, the retailer. Everyone needs food, everyone needs sweets. Has struggled, shall we say, from a cost of living crisis, but it is very cash rich. It is making nice profits. Dividends were increased. 871 shares, £2,200, but 2.7% of our portfolio. And then finally, the shares in AJ Bell, the platform provider we use. 629 shares, £1,725, 2.1% of our portfolio. Considered somewhat as a growth company, it is increasing the number of customers online. It is increasing asset under management. It does pay small dividends, but the dividends being increased, but it's done for growth solely. So let's just say a collection of shares, predominantly based in financial services, what we know about, but all safe, secured companies, being here for, so we say, 100 years, will still be in another 100 years. But as I said, some of them companies are giving very nice yields, 8-9%, shall we say. Does what it says in the tin, no real investment risk, very cash rich from premiums. Now remember, these holding my own personal opinions. It's just to prove if I can build a portfolio, you can too. But if you like the videos, smash the like button, subscribe to this channel so we can reach a wide audience. Now let's get into the funds we hold within our portfolio. So at the moment we own 12 funds, 6 in profit, 6 in loss. £43,237 makes up 52.47% of our portfolio. Now we are going to simplify our funds moving forwards. Okay, some of our funds are treading water, not going up, not going down, but we're paying, shall we say, fees around about 0.7 to 1%. So we're going to simplify them into some kind of tracker funds and increase our existing holdings. One, hopefully for better returns, but two, to save, shall we say, management fees. So let's look at the funds we've got in the portfolio. So our largest holding is a passive ventures tracker fund. Owns, shall we say, several trackers around the world. £17,360, 21.1% of our portfolio. Very low fees of 0.3%, and it does pay a nice yield of a dividend. We own a legal and general technology fund, £8,000, nearly 10% of our portfolio. Has had a very good lately after a poor 2022, but it was done for diversification. We own a Barry Gifford Positive Change Fund, £3,500, 4% of our portfolio. Slightly in profit, but just treading water, and it owns about 40 stocks, but it was done for, shall we say, diversification. We own a US Smaller Companies Fund, again is in profit, but seems to be treading water, up 1 month, down 1 month, but £3,000, nearly 4% of our portfolio. One share that has struggled, shall we say, or fund is a China fund, £2,600, 3.2% of our portfolio. China has struggled in the last 12 months, but hopefully we'll be back in profit, and then we'll review what we do with the scheme or the fund moving forwards. We own a mid-cap fund, £700, 2% of our portfolio. And another fund that struggled is an emerging market fund of £1,650, 2% of our portfolio. Right down, shall we say, to a Russia fund. We put £500 in. It was on profit up to £600, or 20% profit, and it's been affected by the Russia-Ukraine conflict ever since. And it's hovered around about £250 since that decision or that event. But thankfully, it makes up 0.3% of our portfolio. So as I said, a collection of shares, mainly done for diversification because we were solely UK based. But moving forward, we will simplify our shares possibly from October onwards. And remember, it's not a get rich quick scheme. We'll have good years, we'll have bad years, but the idea is we're going to make 10% each year. We're going to get dividends which will be reinvested, and the portfolio will snowball. As I said, it's worth nearly £82,000. But it just goes to show, if I can put a regular amount each month or each quarter and build a size portfolio, you can too. Remember, there's my own paid opinions. If you like the videos, smash the like button and we'll see you again in the next video.